Okay, hello traders, and welcome back to the placing your first option. Okay, hello traders, and welcome back to the placing your first options trade video series. We are already to number 3. 3 down, 5 to go. What are we talking about today? Analyzing and setting up the trade. I alluded in the second video to the Analyze tab, as if we're going to start manipulating some options prices and seeing how time values will impact it. And I actually was off a little bit. We will get to that. In this case, the analysis is going to be technical. We got to analyze the stock first. I can't put the cart before the horse. And so in this situation, we are going to analyze the trade via price action. Do we have an entry? Can I set a stop? Can I set a target? Do I have a time frame? Do I have all the variables I need to manage this trade effectively, know when and how to take profits, how to move my stop loss, when is the trade over, all the things we talk about in our day-to-day meetings, especially when we're reviewing trade alerts. That's what we want to do here. My name is Scott Beck. I am the head trader here at MarketWatch Group. First and foremost, as always, let me remind you that we are not brokers. We're not advisors. We don't give advice or recommendations. This service is for education and illustrative purposes only, particularly these video courses. These are educational videos. The trade we go through, by the time you watch it, could be 6 months old, a year old. Maybe it's still a good stock, but you shouldn't think to yourself, maybe I'll go trade this. No, you'll take the principles you learn, go apply it to your own. Let's think about what we are going to do then. Number 1, we're going to talk about technical analysis for options. What are some key indicators and patterns that we look for that you're going to see over and over again? I want you to understand the impact of earnings and other news, especially significant news, and how that's going to impact particularly options. Options are more sensitive even than the stock to those types of binary events. I want to help you understand how to assess liquidity, and I want you to be a liquidity snob. It's not a little important or kind of important. Liquidity is absolutely crucially important. We don't trade illiquid options, period, and stop. That's it. And I want to make sure you understand volume, open interest, how those will work to your favor to understand that. We're going to establish the basics of a trade plan. Entry, target, stop, time frame. Those are going to come from our technical analysis. Those are going to be used to manage the trade. We're going to make sure you understand how to start translating the technical analysis into an options trade using the pricing model. So we will dip into the model. Not all the way, but we're going to definitely get our toes wet using those option pricing models today. Lastly, I want to make sure that you're considering the market posture process and how its results are going to impact the trade, whether you're just putting it on, whether you're managing the trade, or whether you're looking to see if I need to close the trade. Those are all very important things that the market posture can help us do better. So with that, it's a big agenda. Let's get started. Okay. Whew, we went through a lot on that one. That's the end of our 3rd of 8 videos in this placing your first trade. You should feel better about analyzing the stock, starting to analyze that stock and translating it into an options trade. What's next? Again, 5 more. We don't focus on the next 5. We focus on the next 1. What's the next video in the series? Executing the options trade. Now that we've analyzed, we've built it, we have stops, targets, timeframes, strike prices, expiration dates, number of contracts. We're ready to trade, right? We've done stage 1, due diligence. Now what? Now we enter the trade and we wait for the trade to develop. I want to make sure you understand how to select a stock or asset, perform technical analysis to understand the entry, how to set a target, how to set a stop. Make sure you're good on that. How are you going to get more comfortable? Come to the live sessions or watch the video recordings. Make sure you understand the impact of volatility in any potential news or events that are upcoming. Make sure that you're comfortable using a pricing model. Thinkorswim has one. Interactive Brokers has one. TC2000 has one. Most brokers will have one. If they don't, yeah, I would consider finding a new broker. Absolutely. Make sure that you're reviewing your market posture process, the results. Is our posture getting better, worse? And you're incorporating that into how you manage your options trade. Lastly, share, participate, engage with the community on the Circle platform. There's lots of ways for you to interact with others. Move yourself up that leaderboard. Like things, share things, post things. There's a lot there. Trading, as we know, can feel very lonely at times. Get comfortable. Take advantage of that resource. It's there 24/7. All right. With that in mind, that's going to wrap up this video. Remember, the next in this series, as we get to part 4, can't believe we're almost halfway done already, executing the trade. I can't wait to see you there. As always, happy trading. Okay, let's get into the meat of this third video. Analyzing and setting up the trade. What are the core things we want to touch on? First and foremost, technical analysis. Technical analysis. What are we doing here? What is we doing with technical analysis? Price action. We're trying to understand where is it going next. There are a few core things that we're going to look at when it comes to that. Some indicators, some patterns. First and foremost is trend. Is it making a high, a low, a higher high, a higher low, a higher low, higher high, higher low? Is it trending? That's important. What helps establish trends? Support and resistance. Those are the peaks and the troughs. So I have resistance, support, resistance, support, resistance, support, resistance, support. What are we looking for? Acceleration. What else do I have to help? I've got indicators like a stochastics. And you might think, whoa, that looks overbought, but it's turning. Turning from within an overbought situation. You can see back here, we turned and it wasn't overbought, but it wasn't very far away. These are the indicators. We also have implied volatility down here at the bottom, but that is to assess how, not if. Price, volume. You can see I have my volume panel here. That helps me understand conviction. What's been going on? Well, the volume's been dropping. Well, that's great because it's been showing sellers. If the sellers are dropping, what does that tell me? They're running out of steam. We're looking to create a case for this. Is it bullish enough that we want to make a trade? That's the starting point. Okay, well, what do I need to have? I need an uptrend. Check. Within that uptrend, I need a higher high followed by a higher low. Check. Which means I'm at or near this support level. That's the next step of the trade. Am I at or near support? If I was bearish, I would want to be at or near resistance. I'm bullish. Am I at or near support? What would I expect from the volume? I would expect the volume to be diminishing or average, indicating that the buyers or the sellers are running out of steam. Stochastics, I'm a little less picky, to be honest. It's overbought. Okay. What we see right now is kind of a bull flag type pattern. We have a pole, and then we have this flag type setup right here. That's very bullish. We're not going to see, if this trade works, it's not going to drop back down into this area down here. In a slower, steadier trend, we could expect that, but not now, not with this. So that's what we're looking to do. Understand indicators, patterns. If you need more about that, remember we have the Trading Foundations course where we get into technical analysis in great detail. Keep in mind that you have corporate events like earnings that we just passed. Why are those important? Because that caused a big surge in volatility. And after the earnings, that volatility dropped off substantially. If you were in the trade, that could hurt you. But if not, it can help by waiting for it to come back down. Okay, so we do want to be aware of those, which is why I like to have some space out here in the emptiness where my earnings announcements can show up to make sure that I'm not caught off guard. Okay, so let's talk a little bit about, we've talked about indicators and patterns. We talked about earnings. Let's talk about liquidity. It starts with volume. Now, what do I have here? I have average volume of 2.3 million. Our search looks for a minimum of 2 million, a minimum. And I'll tell you what, this shows you we barely made the minimum. And when it comes to the options on this, it barely makes the minimum. I'll bring those lines back up in just a second. Let me just show you this. I'm going to go back into single. What do I need? I need at least hundreds. You can see there's some that only have dozens. I've got hundreds in multiple areas. I've got thousands here of what? Open interest. Open interest tells me how many contracts already exist to help me understand what's the depth of the market. If there's only 10 or 20, it's not very deep. If there's 10 or 20,000, it's very deep. This is closer to not that deep, but the way we would assess it is deep enough. How am I going to make that assessment? I'm going to make that assessment by comparing the bid and the ask. And I'm going to come down. This is the option I'm looking at, this out of the money, 55 strike. Nope, sorry, that's not the one. 50, let's go 50. And I'm going to look here between this and this. You can see it's 280 by 245. Now that's actually about 35 cents. I only want it to be about 28, which is 10%. You can see here it's only 5 cents. That works great. That's only 5%. Here it's 20 cents. So the fact that this one's a little bit more actually makes me think that because this is an after hours quote, the market is not open now as I'm recording this, that would actually come back down to where they're all in that range, less than 10%. Now the ideal is pennies. So I'm going to pull up the SPY as my example. This has tens of thousands of contracts, and you can see that the spreads are very, very tight. Pennies, 1129 by 1133, 924 by 929. Pennies, very cheap. This helps us understand the competition of the market. The more market makers there are competing, the easier it is for us to get better fills. If there's not many market makers, there's not much competition, you're not going to get very good fills on your price. That's just the bottom line. Okay, so now the next thing that we need to do, we need to get ourselves the basics for a trade. Let me get the chart back up here. What do those basics look like? Well, I have this support level. I'm bouncing off of it. That gives me an entry. And I can draw a line in the sand here, and that gives me a stop. So I need an entry trigger. We have that. That's a check. I need a stop loss. Where am I wrong? That's down here. And the two of those together equals risk. Okay? Now, last couple of times this thing moved pretty well. It moved big and then it moved even bigger still, but I'm going to leave it there. And then I'm going to draw this out and I'm going to say, I'm going to ask for another one of those. And that puts me up here around, let's call it 57.75. 57.75. That's going to be important to us. This is my target. And if I look at my target relative to my entry, that is my reward. So if you ever ask, how do I get a reward to risk ratio? There it is. So if I'm getting in at 48.73, 48.75, we'll call it. I'm getting out at 50, what was the number up here? 57.75. That's 9 points. That's $9 out here that I have in my favor. And if I'm wrong, I'm getting out down here around, we'll call it 45.25. That's $3.50. 45.25 is $3.50 of risk. Okay, so what is my reward to risk ratio? And I think we could ask for a little bit more, but just for us to understand, that's $9 of gain divided by 350. That's a 2.6 to 1. Great. That meets all the rules. My minimum is 2 to 1. I want at least a 2.5 to 1 if I can. That gives us that. We have that. Okay. Now, remember, we always want to consider market posture. Why would we do this trade? Because I'm bullish. Because I'm bullish on consumer discretionary stocks. And this is setting up. So we want to make sure that the precursor supporting evidence is already in place. But now we have everything. What do we need to do? We need to translate this to the options analysis. So I'm going to come back into the Analyze tab. I'm going to come back into VSCO. I'm going to come down here to these price slices, and I'm going to say my target is 47.75. Sorry, 57.75. My stop is 45.25. Our time frame, we said, looks like about maybe 10 days or so. I'll probably give this just to the end of the first week to be wrong. That's what I'm looking for. Is it wrong? And now I'm translating the stock analysis into the option analysis. I'm putting all of this in so that I can add a trade. I'm going to go to that $50 strike. I'm going to assume I can get it a little bit cheaper for maybe, we'll call it 265. And now I have the ability. Remember, I'm going to change this down. Over here, I can change the number of contracts. I'm going to bring that to one contract. And you can see what I have. This is my risk, 155. This is my reward, almost 600. This has moved to this went from a 2.6 to 1 to an almost 4 to 1 on the option. Why? Because the options are cheap. We just saw the implied volatility drop significantly after earnings. That makes cheap options. So the ability for me to buy these cheap options means I'm going to take my reward to risk ratio, translate it from the stock to the option. And in this circumstance, I've improved it. And that's definitely one of the goals. So as of right now, we've now picked a stock, chosen the strategy. We're analyzing the stock. We're translating the technical analysis from the stock into the option. Everything's shaping up. This is looking great. Now we can move on to the next step.